I built a strategy where I let my dividends pay for a 7-day getaway in Cartagena, Colombia. One thing about me is I love traveling and I love finance, and I wanted to combine my love for finance and traveling together to create a strategy to pay for my travel. If you've ever been to Cartagena, Colombia, these trips can get very expensive very fast. And I don't like to travel with any guilt on the money I'm gonna spend. I just wanna enjoy myself. So I'm gonna show you the strategy that I use to pay for 100% of the trip with passive income dividends and give you a breakdown of the cost and what I did with the money. And at the end of the video, I'm going to give you a resource that you can use to research your passive income investments. So let's talk about the guilt tax. And I hate this feeling. It's the feeling when you go on vacation and you feel restricted. I had this portfolio and it looked really good on paper, but it really didn't serve anything in my day-to-day life in creating experiences for me now. And so what I wanted to do is close off that gap that exists between the sacrifice you make for today and having retirement savings for tomorrow. I feel like there's a balance between both, because in the end, you can have millions of dollars in retirement savings and look back and say, I spent the last 30 years of my life and I don't have any memories with all this money that I was saving. So I started to spin my head and think about how could I fund my next vacation completely with passive income and not any dollars from my 9 to 5 job. And this is the strategy that I came up with. So I began by budgeting up and not budgeting down. I wanted to build towards the trip that I actually wanted and not have to have this compromised, watered down version. That was step number one. It's just deciding in my head, like, what is the type of experience that would make me happy, and then working from there. Step number two is I began to price every component of the trip. So the flights, upgrades, accommodations, boat charters, nightlife, like everything. I wanted to lay it all out and see how much I needed to have the type of trip that I wanted to have. Step three, once I had the total budget, this was the dividend income that I needed to target and figure out how to create my portfolio, what we're going to cover today. And then step number four is working backwards, where I decided, okay, based on the dividend target that I need in my portfolio, what percent dividends should I be targeting and what are the best fit investments for this? And then step number five is identifying the allocation that exists within the portfolio that's going to allow you to support this passive income goal without disrupting your future growth for any type of future retirement plans. So let me break down my 7-day Cartagena experience budget line by line. So first things first, the flight round trip with the upgrade was about $1,500. And then the Airbnb that I stayed at was about $600. We did a private boat charter that was $600 a piece. I split that between all of my friends that went. VIP nightclubbing experience. I'm not much of a nightclub person in the States, but when I do go overseas, I enjoy going to the nightclub. And a little note on this, like, you never want to be that guy that's at the nightclub and the bill comes and you order another bottle and you're kind of scratching your head and looking around and saying your bank card doesn't work. We've all been around those people. You don't want to be that person. So I set aside $1,500 for the nightclub experience. Dining, 7 days, $700. Transportation, $100, and then miscellaneous spending, $1,000 for a total of $6,000. Now, this may not be your style of trip, but this is how I wanted to structure my style of trip so that I can go guilt-free and just do what I wanted to do on the time that I wanted to do it on. So before we continue on how I built out the portfolio for the trip, what I want you to do is like and subscribe to this channel if you're enjoying this content and you're finding it helpful. I'm shooting to get 500 subscribers on the channel. And as soon as I get 500 subscribers, I want to start a free school community where we can talk about these topics, living your best life, creating your ideal financial life. I also want you to follow me on Instagram at financewithsantiago.com. I post a lot of content on there about lifestyle and finances as well. So let's continue and get back in the video. So how did I build these dividends after listing out the trip, deciding what type of trip I wanted, and getting that passive income goal? Well, I will tell you, this didn't happen overnight, right? You already need to have a portfolio in place, right? It takes money to make money. If you have a portfolio in place, you can begin to enact a strategy to create passive income from the portfolio. So what I wanted to do is look at my current portfolio that I had and identify an allocation percentage that could be carved out of the larger portfolio and then build passive income without disrupting the compounding thesis. As the portfolio grows, you're not paying taxes on it. You're not paying taxes till you sell it. And when you do sell it, you pay capital gains tax. Well, there comes a situation. Let's say you have $1 million. Maybe you carve out $100,000 of that $1 million to build passive income streams out of your portfolio. And a big reason for this is because your portfolio is one of the greatest resources to access capital, right? Like besides using your cash that you're working for. So once I decided how much of my portfolio I wanted to carve out that would meet the passive income goal that I needed for the vacation, which was $6,000, I began to choose different REITs and BDCs to use as investment vehicles. Now, if you've never heard of a REIT and BDC, I've mentioned this on some of my previous videos, but a REIT is a real estate investment trust. It's a special type of stock that invests in real estate, and then they pay out their income to dividends to shareholders. The other one is a BDC. This is business development credit. Same type of thesis. It pays out 90% of its income as is required by law, and they give out loans. So think about if you gave your neighbor a loan and he was going to pay you a certain form of interest. This is what the stockholders are doing, except they're lending out to different companies. Now, as a disclaimer, this is my story. This is not investment advice. So don't come in my comments talking about Blue Owl private credit and all this crazy stuff. I'm giving you tools that are available on the market to do different things in the market. This is not an argument on if you should do it, if you should not should do it. This is a story about how I paid for my vacation with passive income. So take that as it is. So I didn't want to just pick any REIT or BDC. I wanted to have some type of selection criteria behind what I was doing, because not all REITs and BDCs are created equal. If you look at a different list of REIT and BDCs, you will see that they have different dividend yield payouts. Some own different types of assets. You need to understand what exactly you're buying. So the selection criteria that I have is, one, I want to see a consistent dividend payment history, at least 5 years of consistency. Next thing I want to look at is their balance sheet health. How much cash do they have on the balance sheet? Do they have a ton of liabilities? Are they about to go out of business? Understanding that balance sheet gives you a good idea of the health of the business. The next thing I want to look at is the quality of the underlying assets. You still own a stock at the end of the day, regardless if it's a REIT or a BDC. These stocks own assets, so the quality of their assets can determine the longevity of the company and the stock. And then I would just want to have some macroeconomic awareness, right? Like in the REITs situation, if you're going to own real estate, understand the macroeconomic environment for the real estate that you're owning. This includes interest rates, the environment that they're in, as far as the markets that they're in. When we're talking about BDCs, understanding credit conditions. Now, what you can use to figure out all this information, what I'm going to give you here is a little cheat code, is Perplexity Finance. If you download the Perplexity desktop app, there's a little tab on the left that is the finance tab. You can go in the finance tab, and this is AI specifically designed for finance questions. So you can ask it to give you a list of REITs and BDCs. You can ask it dividend payment history for the BDCs. All these different questions that I just outlined as the selection criteria, you can ask it within Perplexity Finance and get the answers that you're looking for. So what you can do to make this easy is create a little table for yourself. An average dividend yield, I use 10%, right? As an example. If I were to invest $30,000 and get an average dividend yield of 10%, I have a $3,000 trip. If I were to invest $60,000, now I have a $6,000 trip, so on and so forth. So you can create yourself a little table. And even if you're not at the point where you can pay for your entire trip at first, or the trip that you want, you can know what your target is and how much you need to have in your bigger portfolio so that you can carve off that little slice that you're looking for and then create the passive income that you need to cover your entire vacation completely through dividends. And this is exactly what I did. I created a baseline of the dividend yield I wanted, which was 10%. And then I began to say, okay, if I want to pay for this style of vacation, well, then how much dividends do I need to create? And then what are the REITs and BDCs that's going to get me to that goal? Now, this is going to be a completely different mindset shift. And I had to make this mindset shift when I was paying for my vacation dividends. When you start out investing, much of the attention is always paid to future growth and appreciation in the portfolio and retirement, and rightfully so. You want to have a nest egg for tomorrow. My philosophy is that we can create balance in our lives through our portfolio. every single dollar that we have invested does not have to necessarily go for retirement. Keep in mind that this is not going to max out your retirement. If you're taking income and creating passive income today, you're going to pay more taxes and you're not going to be able to maximize your retirement dollars. But there's a healthy balance between both. For me personally, I'd rather take less in retirement if I can look back and say, hey, over the last 30 years, I've created a bunch of wonderful experiences with passive income that I've generated from my portfolio, and I wasn't working my tail off just to enjoy the fruits of my labor, right? It's a different core philosophy than what you will see in a lot of typical portfolio management and retirement plans, but you need to accept and understand that core philosophy to do something like this. So at the end of it, all you have in life is your experiences, not the number that's in your brokerage account or your 401k somewhere. Those numbers may be fancy and nice, but when it's all done, you're going to look back and you're always going to remember your experiences. And creating passive income this way is one of the few strategies that lets you build long-term wealth and financial security and create those experiences today at the same time. So you're not sacrificing one for the other. You're just reallocating to put your portfolio in a position where you can get the best of both worlds. The goal isn't to stop growing your portfolio. The goal is to make your portfolio serve your life at every single stage. And when you're enacting this strategy, you do want to be proactive about how you're doing this, because dividends are paid quarterly and the amount that you're seeing in percentage yield is the annual yield. So what I did is I was a bit proactive about it. I looked at my portfolio and I said, okay, next year when I go to Cartagena, what type of vacation do I want to have? And based on the type of vacation that I want to have, what do I need to invest? What type of assets do I need to invest in on the passive income to make sure I pay for this? For me, this was a 7-day vacation to Cartagena, fully paid for the way I wanted to do it, including the nightlife, the boat, so on and so forth. If you've never been on the boat in Cartagena, trust me, it's one of the best experiences. There's nothing like just being on the sea, wind blowing in your face, seeing the ocean, seeing the buildings. It just makes you feel free. And me having that experience is worth way more than any type of dollars that I could have when I'm 66 years old. Hopefully when I'm 66 years old, I'm just sitting my behind down somewhere in a rocking chair and really not doing much and not requiring much money, right? I've already got all my fun out of my life. So now that you've learned about how I paid for my vacation with dividends, watch this next video where I go in depth on how I created my passive income streams in less than 30 days to pay for this vacation. That's going to be linked above.